JFD, just fair and direct. JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 28th of July 2020. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as usual, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So right there, guys. So yeah, and I'll take you to this page, which we, as I said, update on a daily basis. Now, quick update on what's happening here globally. So in terms of the coronavirus, now the figures unfortunately continue to rise, but yep, still kind of seems to be looking good. Just bear with me a moment. Let me just load this this website here, because so yeah, for the last few days the figures are kind of looking good, relatively good, because we don't have these strong sharp up moves. However, of course, we have seen this in the past, so yep, let's probably not get our hopes up yet too early, because this might change very quickly. But again, I hope not. But like I said, yep, as we can see here from the history, that this does change very quickly sometimes. So right now, let's jump into the markets. Now the first one on the touch on here is the Nikkei 225. So the index closed in the red today, and it did try to push above this upside support line taken from the low of the 15th of June that I talked about yesterday. But as you can see, it did initially push above it, but failed to kind of stay there, and yep, it drifted back down and remained below this upside line. Now, of course, this kind of makes us a little bit worried, but on the positive side is that the price continues to balance above the 21-day EMA here, which seems to be kind of providing decent support, although we keep getting these little overshoots here, but it's still the price keeps climbing back above this 21-day EMA, shown as the yellow line. Now, in a way, for now, we're not going to do anything, to be honest. We're just going to monitor this, and because for us, in order to aim for some lower levels, drop below the 22,285 zone would be required, and in order to aim for some higher levels here, then a push above the 22,965 zone could be ideal here. But again, slightly above that, we do have the highest point of June as well, which is in a way here. So a nice good push above that one would confirm a forthcoming higher high. So in other words, guys, for now we're just stuck here, and we're waiting for a better move here from Nikkei. Now Shanghai Composite is trading slightly in the positive territory, and the index kind of did try to make its way back above the 21-day EMA. However, it failed to do so, failed to remain above it. We still have around 15 minutes left of trading here on the Shanghai Composite. But of course, from the positive side is that it still is trading above this 3,181 zone, which is marked by the low of the 17th of July. So in a way, even if it drifts a little bit higher here, yes, that's great, could be good news, but don't forget about this little short-term downside resistance line taken from the high of the 14th of July, so which could in a way provide a bit of resistance. So in other words, guys, keep in mind that something like this might happen here, because if this downside line does provide resistance, then another round of selling could be possible, and this way basically the index would be forming a possible descending triangle. And of course, according to all the TA rules, you do understand that these tend to break to the downside. However, we've seen that happening the opposite direction a few times, so that's why we're not gonna become bearish straight away here. For us to, let's say, maybe to become bearish, at least in the near term, a drop below this 3,181 zone and ideally a daily close below it would be required. And even then, if it slides further down, still the bulls have a chance to kind of jump into this index somewhere near this upside support line taken from the low of the 19th of March. So again, that's why be very careful here, guys. So in other words, in terms of the downside from the short-term perspective, to consider lower levels, we need to see a drop below and ideally close below the 3,181 territory, and in terms of the upside, we need to see a break of this downside line, and maybe in addition to that, a push above the 3,336 level that I mentioned before. So keep your eyes on those two levels. Now, jumping into the German DAX, yesterday it closed virtually unchanged. On the positive side, it remained above this upside support line taken from the low of the 19th of March, so that's kind of good news still. But what I was saying yesterday in my morning video, if you remember, I was telling you guys that if this upside line continues to provide support, yes, that's great. We could see maybe some more upside. However, to strengthen that upside idea, a push back above the June high near the 12,913 zone would be required. And as you can see, yesterday the index did drift higher, tested that level, but failed to kind of move above it, and it kind of remained in this little very tight territory. So that's why for now, if we get a nice push, back above the 12,913 territory, yes, there is a possibility to kind of consider maybe the upside here, but we'll be very careful near this 13,237 zone, which is marked by the high of the 24th of February. Now, if that gets broken, now this is another story, and more buyers could be joining in here and potentially driving this one higher. But again, before kind of getting to that level, we need to see a push back above the 12,913 territory. If this upside line breaks and the price falls below the 12,773 territory, somewhere around here, this would, at the same time, this would also place the price below the 21-day EMA, and if we see a daily candle kind of closing below this area, then maybe, well, just maybe we could consider a bit of a larger decline here, initially towards the 12,417, but then we do have this other good potential area of support near the 11,957 zone, and around the 200-day EMA and the 100-day EMAs. So jumping into Bitcoin, so Bitcoin had a fantastic explosion here yesterday and managed to overcome, and this is what I was talking about yesterday, managed to overcome not only the high of the highest point of February and basically the highest point of this year near the 10,933 territory, but it also made its way towards this next target that I was talking about, and that was the highest point of September 2019, and that's around the sorry, not the 10,900, 10,491. That was the highest point of this year, previous highest point of this year now, but it made its way towards this September high, the September of 2019 high, at 10,933 zone. So it reached that level, it overshot it as well, and it even actually managed to close above this. So basically all this is kind of looking quite positive right now. You can see that the We did have a bit of a correction here to the downside this morning, but the price continues to balance above this this high, the September 2019 high, near the 10,933 territory. So if this continues to provide support, then yes, we could see another round of buying here, and the next potential target for us is somewhere around the highest point of August 2019, and that's roughly around the 12,325 level. So keep your eyes on that one, guys. Could be quite interesting. In case this suddenly starts falling sharply to the downside and falling below the 10,491 territory, or even better, 10,398 territory, marked by the high of the 1st of June, or in other words, the highest point of June, then this is where we should probably take a bit of a cautious approach here, because we may see this one correcting even lower. But again, for now, everything's looking quite positive here for Bitcoin. Let's see if it can rally, if it can continue rallying. Now, gold, a new all-time high was reached this morning, and that was near the 1981 zone. So basically we got closer to that psychological 2000 territory. You can see that yesterday yesterday what I was saying about this one was that if we get a nice overshoot here above the 1944 territory, then yes, higher levels could be met, but the overshoot didn't come yesterday. Basically, it did in the morning. It did reach that 1944 level, but didn't really kind of close, let's say, then didn't close the day above this 1944 zone. But this morning we had a nice strong move here, and like I said, we overcame that 1944 barrier and hit the 1981 level, which is now the all-time high for gold. So basically, for now, looking at the way everything's kind of shaping up here, let's be a little bit on the cautious on the cautious side, because again, don't get me wrong, again, we had a decent rally already. You can see that the bears managed to kind of push the price all the way back here below this 1944 zone. So basically that kind of creates this little problem, I would say, because, and also we'll keep an eye on today's daily candle, because if it's going to end up somewhere right here, this could form a nice shooting star candle here, and basically meaning that there is a possibility for a bit of a correction to the downside. But again, for now it's too early to talk about that. Let's see how today's day is going to end up being, and how this daily candle is going to end up being today in relation to, for example, the 1944 level, which is yesterday's high. And if we do get a nice close maybe above this, then, well, I mean, there could still be a chance for this one to continue moving higher. But if somehow the bears manage to keep the body of the candle here below this 1944 territory, then yep, there is a possibility to see a bit of a correction here back down. But the reason why I'm saying that it's correction, because it's still trading above this upside support line taken from the low of the 20th of March. So, and any move lower here could still be seen as a good opportunity for the bulls to step in, take advantage of the lower price, and push this one higher. We need to see a break of this upside line first before, let's say, considering larger extensions to the downside. Silver also had a nice push higher, and also exploded to the upside, reaching the area near the 26.20 zone. And you can see now the bears kind of managed to drive this commodity all the way here back down towards the high of yesterday. Let me just put this one on the chart. The high of yesterday was around the 24.59 zone. So this is where the commodity is currently trading at. So again, a similar story as with gold. If by any chance this one manages to remain below this 24.59 level today, then maybe we could see a bit of a correction here, because this candle also would form a nice shooting star, which tends to be a reversal signal. Now, jumping into a few pairs, USD CHF. Here I talked about this one, and this is what I was telling you guys yesterday in my morning video, and I was telling you guys to keep an eye on this one. also in the traders tea time I've discussed this pair, and basically we had a nice daily close above this level, above the 0.9184 zone. So this kind of creates this slightly creates a slight positivity here and an opportunity for the bulls maybe to drive this pair back up. You can see that yesterday the daily candle here formed a nice doji, which also tends to be a nice kind of reversal signal. So again, for now, looking at this picture, if the pair continues to trade above the 0.9184 territory, which is the lowest point of March of this year, then there is a good chance we could see this one drifting higher. However, as I mentioned yesterday, that even if it climbs all the way here back to the maybe 0.9322 territory or above that, as long as it stays below this downside line taken from the high of the 28th of May, then there is still a chance for this one to kind of drift back down. In terms of the downside, we'll take a cautious approach, and we'll wait for a daily close here below the 0.9184 territory before considering lower areas. Now, another pair which I've looked at before, and now basically the spotlight is once again on this pair, euro against the Turkish lira. So the pair exploded yesterday. The Turkish lira devalued heavily against its European counterpart, and you can see that basically the Turkish lira created a new the euro TRY created a new all-time high, and it was a record low for the Turkish lira against the euro dollar, and the pair for example here reached the 8.2050 zone, roughly around here, and then of course corrected a little bit back down. But today you can see that the pair continues to trade above this 8.0132 territory, which was the previous all-time high, which was reached here in August 2018. So if the pair continues to balance above this area, then there's a good chance for this one to continue higher. Of course, keep your eyes on the political events. There are some news saying that there is a possibility of European sanctions on Turkey, so that's why that could keep the Turkish lira under pressure against the European currency here. So yep, something to keep in mind, guys. Of course, at the same time, be very careful. It could be very volatile. So keep your eyes on this, guys. And like I said, it could be quite interesting if the pair suddenly falls back below the psychological 8 territory, then maybe we could see a bit of a correction here to the downside towards the this upside support line taken from the low of the 5th of March. So something for you to keep in mind. Now, euro against the GBP, the British currency here. Yesterday I had a quick mentioning of this one, and basically the pair still is struggling to overcome the highest point of last week near the 0.9138 zone. It did overcome it yesterday, but didn't really kind of remain above it. Now, this morning we saw another kind of a move towards this level. As you can see, it tested that area, but again drifted back down. So basically we need to see at least a push above the 0.9138 territory before considering some higher levels, but for those who are more on the cautious side, you could also wait for a break above the June high near the 0.9175 territory, because such a break here would confirm a forthcoming higher high, and yep, more buyers could be joining in. So something for you guys to keep in mind. For now, we'll probably take a bit of a cautious, maybe neutral stand here, although the pair is still trading above the upside support line taken from the low of the 13th of July. Still, we need that confirmation break here above, at least above the 0.9138 zone. And finally, Euro USD. So yesterday the pair managed to climb nicely above this 1.1725 zone, so it remained above it. Today we're seeing a bit of a correction here to the downside. However, the rate is still balancing above this this zone, this 1.1725 area. And as I've mentioned before to you yesterday, for example, that is the inside swing low of the 24th of September 2018. Slightly above that, we do have this 1.1815 zone, which is the highest point of September 2018. So that's this is my main target for now. Again, I want to see how this is going to perform near this 1.1725 territory. If it continues to balance above it, then yes, a good chance of moving towards that 1.1815 level, and maybe today, maybe tomorrow. But again, all this depends on how it's going to be balancing here above this 1.1725, or in other words, if it will continue balancing above this 1.1725 zone. If it won't, then maybe a bit of a correction here to the downside could be possible, guys. And the reason why I'm saying correction, because we are still above this upside support line taken from the low of the 14th of May. So in a way, any kind of move lower here could still be seen as an opportunity for the bulls to step in, take advantage of the lower rate, and drive this pair higher. So again, we are at a very interesting spot. We, of course, some might say that we are quite overstretched here to the upside. We are quite overbought, but yeah, don't get me wrong, sometimes this could move in one direction here, for example, like it was the case back here in the end of February, and then we had it in opposite it moved in the opposite direction from around mid-March, for quite a while, I would say. So that's why probably the bears should be very careful for now, but if we get a nice daily close below this 1.1725 territory, then just maybe we could see a bit of a bit more correction here to the downside. So be very careful, but for now the main target for me is the 1.1815 level. So guys, I really hope you found it useful. I'll have to wrap it up here, and thank you very much for watching and listening. If you want to catch my video later on, my trader's tea time is, as always, guys, 13:15 GMT time. But for now, I hope you stay safe, both health-wise, market-wise, and yep, I'll see you later. Thank you very much, and bye-bye.